dive in today. Bullish trading strategies. We're going to start with breakouts. And the basic concept behind a breakout is that there's some resistance holding the stock back. Something that is keeping the stock depressed, right? So there's a lot of different types or styles of resistance. It could be that the stock has hit this level before and had trouble. It's sold off from that area, so it's a clearly defined resistance. Sellers acted here in the past. We expect them to act the same way in the future. It could be that it was only one time that we turned down, but it was a significant turn. This was the area that the trend failed at previously, for example, a trend stalling or changing pivot resistance. It could be a psychological price point. You know, the first time a stock gets to 100, or first time that gold got to 1,000, first time that the Dow got to 10,000. There are psychological numbers that stand out, that loom large in the markets, that can act as resistance. Could be moving averages. 20, 50, 200 are the most widely watched and followed on Wall Street. But again, technical resistance, something that we might struggle with, but if we can break through, could be a very significant turn. Now, as we look at a bullish breakout, the actual breakout occurs once you've cleared that resistance. It's like if you look above you, you have this ceiling. If you break through it, you've now broken through. You have clear skies ahead, right? You have an opportunity to move higher, and buyers feel more confident that they can aggressively come in because we just took out a key technical level, right? It gives buyers confidence. It gives short sellers that are betting against the stock confidence, you know, that, hey, we're in the, well, pardon me, short sellers a lack of confidence that, hey, we're in the wrong trade. We are in a losing position as that stock breaks higher in price. So if we just push through resistance, where can we go? Their imaginations can run wild on that one. And frankly, the possibilities are endless. This stock could really significantly go to the upside. So you get a short squeeze scenario where short sellers are forced to cover their shorts, further perpetuating the upside by buying the market and pushing stock prices higher.